Hey traders, I just want to bring your attention to the Dow on the daily time frame. As you can see here, ever since the 1st of January, or the end of December, should I say, we have been in the midst of a complex retracement. As we can see here, we made the low here towards the end of last year on the 26th, and since then we've been making higher lows. But is this a complex retracement, or is this a high low in advance of a continuation to the upside? When we get the overall context here, we can see that the Dow 30 printed its all-time high in October last year, 2018, and since then we've been making lower highs, and we broke this level of key support here throughout Christmas time, which is traditionally a very bullish time. We did not get our Santa Claus Rally this year, which is pretty telling of some potential headwinds, which could spell danger for those people who are bullish with equities. So what are we looking out for? Well, given the fact that we've made a new low through that level, we're going to take our Fibonacci retracement tool from the all-time high printed in October last year to the low of the 26th of December. And we've plotted our Fibonacci retracement levels. We've got the 50, they've got the 0.618, and of course the 786. So what we're going to do is we're going to map the more recent price action here, this A, B, C, D, as a potential three-wave harmonic pattern, and what we are interested in is where the D is potentially going to be, and whether we get an overlap with point D with a Fibonacci retracement level when taken from the all-time high to the most recent low over the past couple of weeks. So if we drag the Fibonacci extension tool from point B to point A, we can see that we've got the 1.618 Fibonacci extension level mapped very nicely over the 50% Fibonacci retracement level. And if we look at the price as well, we can see that these two fib levels overlap very nicely with this previous swing low. So what now? Well, what we're going to do is simply just lie and wait for price to come to this level, and we'll be waiting for a potential signal to go short. This could manifest itself as a bearish pin bar reversal on the daily or the weekly time frame, and if, as and when we do get it, we'll be looking to sell the break of the low. So if we do get it, no guarantees of course, we'll trade it. If we won't, then we can just reassess the situation. Okay, so just to recap, what we're waiting for is a sell off the back of a lower high, if, as and when price gets to this Fibonacci cluster here, based on the D completion point of a three-wave harmonic pattern, and of course the Fibonacci retracement taken from the all-time high in October to the low of the 26th of December. Okay, so we're just regarding this high-low as potentially a C to D leg in a complex three-wave harmonic pattern. Nothing more, nothing less, ladies and gentlemen. It's nothing more than a potential sell the rally in what we anticipate to be a long-term or medium-term downward trend, purely based on the fact that we've seen the break of this level of support. January is historically a very bearish time for equities, and the fact is we did not get the Santa Claus Rally at the end of last year, which is very telling. It's like the first time, as Julian would have outlined in the Global View webinar, that this has happened in 15 to 20 years. So that is very, very telling of what could potentially be happening next. Okay, so that is the Dow on the daily time frame, ladies and gentlemen, on our watch list for those reasons just mentioned. Okay, so until then, happy trading, folks.